Good morning, everybody. It's Monday, July 1st. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn down 4 1/4 at 416.5. November soybeans were down 3 at 11.01, and December Chicago wheat was down 2 at 5.95. Good morning, guys. I know we've had the weekend here to digest a little bit more of the USDA report, take a look at weather models. Dustin, maybe just a few thoughts to kick us off here this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Well, we're starting off lower again, which is understandable with the forecast changes. Continues to show cooler and wetter temps or wetter conditions going through that critical pollination window. So the forecast models have certainly changed quite a bit from what they were looking at even a week and a half ago, right for this point in time. And it's just all kind of a culmination of a bunch of bearish things at once. It kind of makes sense. The 180-degree turn markets have made here over that 2-3 week period. Certainly as you look at, you start mapping out what a balance sheet could look like if we're above trendline yield, with these new acreage numbers, with a carry-in that might be a little bit more sizable after seeing larger stocks than expected. And this price action suddenly makes sense. So, it's unfortunately a 180-degree turn for markets. Just, we have to kind of look at falling back to those plan Bs in a lot of cases. Where is the floor at? What have we done to this point in time? Where does insurance kick in? What do we expect for farm bill payments if you're an ARC County or PLC? All of those things kind of need to be taken into account because obviously we've been talking about this for months, where break-evens are quite a bit higher than where prices have given a chance to sell within this calendar year. And it's been a long time. I can't really remember on a year where we didn't see at least one selling opportunity within the calendar year for the average grower to sell above break even at APH. But by all accounts, it appears like, Murphy's Law, this might be that year.
Right. I guess it's one of those things too, Dustin. We've got, coming into the 4th of July. I know, Jason, you made mention that, kind of Northwest Illinois, there's corn starting to tassel up that way. And by all accounts, it's coming into perfect weather.
Yeah, no, I mean, crop looks great in Northern Illinois. I drive I-88 from suburbs of Chicago all the way out to Sterling, Illinois, and all the way across even to Clinton, Iowa, and that whole stretch is just looking great, and the crop has just exploded. So it's July 1st, and we got there's some of the early stuff that was planted is already tasseling. So yeah, crop looks good up here. Obviously there's problems in different parts of the corn growing regions, and Central Illinois. I've talked to some guys that have traveled down that area. It does not look as good, but it's just catching up really well, right? Some of the spots are starting to fill in where you can't see them anymore. So I'm sure there's going to be some variability in some of those areas that aren't perfect. Yeah, Northern Illinois looks great. It's kind of surprises you every time how quick this crop grows when it gets really good weather, good heat, good sunshine, and good rain. So
very good. Ben, good morning. Some thoughts from your side of the desk here this morning?
Yeah, I think that we've digested. I'm sorry about the quality of the video. I'll have to work on that.
Looks like you're a chief eyewitness.
Hidden
his identity. Witness protection program.
Yeah. Hiding my
it's a corn bear. He's got to protect his identity.
Do I need to put a voiceover in here too and filter it out? To Dustin's point, we digested an incredible amount of negative information over the last 5 to 10 trading days, going back to a forecast shift. And on report day, there was a rewarding of that. You're getting into an area now where you would expect some sort of at least stabilization, but managed money short 275,000 contracts and profitable and just about all of it. It'll be interesting to see if they want to really shoot their next 75,000 down here, or let it recover a little bit. Markets for sure disappointing. I think that beans are sitting kind of on a cliff here with the uncertainty of still of how quickly forecasts can change heading into August. But I don't see any reason why, other than some short covering bounces, anyone would be getting excited about being long beans. And when you throw in the caveat of the addendum that was put on the USDA report, there'll be an adjustment of some sort at some point, and it may not be enough to move the needle in either commodity, but you're kind of caught between a really negative market and the possibility that you could see some minorly supportive change. And we've discussed numerous times, what does it mean for we've typically discussed it in yield of 4 or 5 bushels. What does that do to the corn balance sheet? And now I think the bushel question is being answered, but what kind of adjustments could we potentially get from acres or PP? And I don't think we'll have that until August.
Yeah, that was going to be my question. Is that when they're looking to do that adjustment, is August? It's not going to come up in July?
I think it's the FSA data that you have to look at when they come out, but I think we need to look into that.
Okay. Yeah, we can look into it. Jace, you had something to mention there?
Well, I was just gonna, comment on kind of piggyback that, right? The funds got a really good short position on at higher prices than here, and they just got, we were talking about before this started, it was like, you had, if you had all your chips on red or black, and you just hit the kind of home run of, going right into first notice day, you got a bearish report, you got the weather models change into what looks like perfect, at least for the next couple of weeks. And you got a really profitable trade on right now. Spreads are getting wide, so it's hard to say, it's hard to imagine the funds getting shook out of this position, right? It's the playbook of the spread rolling position last year. I think you got to ask yourself, okay, would you rather be long, new crop corn at 420 or short, between now and harvest? It's a tough question, but I think a lot's changed in the last couple of weeks, and the narrative of being long here going into harvest with how this crop looks in the forecast, and with the way the spreads work and carry works, and with the funds having a massive short position on it, it's going to be tough to shake them out, in my opinion.
Yeah.
Oh, very good. We got a couple minutes before we're coming into the open here, Ryland. Last week, cattle slaughter down 1.8%. Pork production unchanged with slightly higher slaughter. So what are your thoughts here as we start the week?
Yeah, well, this cash is pretty slow to start last week. Market's been on this nice big rally, and we saw looked like a little bit of covering here before the weekend. But cash trade seemed a little bit disappointing. We only really saw 188 to 190 in the south, and then up in the north, 198 to $2. I mean, it's hard to say that these are disappointing prices, but just disappointing from expectation. I think just with this kind of sharp rally going into the weekend, and then just kind of tapering off right there at the end. So, just overall, it seems kind of like we're probably going to get some hedge pressure here. Obviously, the beef market is holding up a little bit better than expected to. Beef was higher on Friday as well, and typically the market is topped by now. So there's been a lot of added support to the market, and we're just kind of languishing. And I think guys are just getting a little bit antsy if they need to get something sold here, protect some price, just because it's been easy just to kind of wait and then sell cash with the market just going up. But now we're kind of entering a time a little bit more uncertainty. The expectation is that we're going to have a little bit better of a supply situation in July, maybe even a little bit further out, just based on what the cattle on feed report said. So we're just kind of worried that there could be a little bit of a delayed reaction to last week's cattle on feed report, because it was completely shaken off and just kind of overtaken by this mad dash for beef and higher cash prices. So overall, I think it's just kind of a cautionary situation here. We've seen these pullbacks in the cattle last a couple days, and you kind of trade below some near-term support levels, but then you've been able to bounce back pretty much every time pretty consistently as cash stays up. So we've got a big discount on the board still. So as of right now, it just seems like the best hedge is really in cash right now versus the board. So just kind of waiting to see what happens there. Otherwise, hog market finally found a little bit of support. Cattle, the hog and pig report was neutral. The market has since kind of leveled off since then, but as of right now, just there still really isn't any good news, and I think just the way it's shaping up, there's a lot of questions of what happens now that we're getting kind of past this seasonal of really good high prices and cutout and cash. You got a lot of that kind of baked into the market now, but as we've seen, the funds have been really aggressive in selling it for the past couple months now and worked finally into a short position. They're net short 9,000 hogs, and they're just after selling 8,000 as of last Tuesday. So it seems like now that we've got the funds to completely flip, there could just be a little bit more pressure here on the market. I think overall, producers are. It's an easy spot to look to re-own, just from that perspective. But there's just no real good news right now, and I think just as it goes for demand, we're looking at anything between 4th of July as being this nice big uptick, and then same thing with the week after Labor Day. So as of right now, it just seems like the big shorts are going to try to power through that good demand time frame.
Very good. Appreciate that. We did have a question come in here. Nick, good morning. Dustin, I'll throw it over to you. He's wondering, what did the December, July, and December corn spreads do report day? And then are they acting as bearish as the futures?
Yeah, they are. I mean, we widened out the new widths on those spreads, specifically Dees trade down to 45 under, which there's a couple of reasons for that, right? We had larger acreage, and so that doesn't just have implications for the 24 season. It also has some for 25 as you go back into that next year's rotation. Next year largely was expected to be another large, corn acreage number a year, depending on where that ratio sets up. But if you're coming in closer to 92 million acres, 91.5 million, that automatically sets the stage up. Well, we're going to be potentially oversupplied for the 24 season. We also have a falling Brazilian real, and so their prices are still incentivized for production as well. So 25 actually held decent value, both the July 25 and Dees 25, as Dees 24 fell. So it was pretty bearish. I mean, they widened these things out to of course, they rallied going into the close there on Friday. I'm not sure what that was about. Maybe funds got to a level where they're ready to start covering some of these huge shorts that they had. But then again, we got another forecast change over the weekend. So, largely that's always our kind of cue for the market's opinion on market abundance. And that goes kind of outside the currency. So you can have high flat price and wide spreads if the currency calls for, higher flat prices, but we still have plenty of supply around. Right now, we happen to have a currency that calls for lower flat price and also abundant supply. And so, yeah, it's doing what I'd expect it to do right now.
I think too, just to add to that, Dustin, that for today's date, DC's was extremely bearish. To get to 45 under in June.
Right.
It's really rare. You'll see that at harvest, going into first notice day of December, or, after you've had the big crop and you have all this harvest pressure, to see it go to 45 under. I don't think I've ever seen that before. Last year got to 58 with the new carry charges, but that's after we proved the big crop and all the harvest pressure. So at least I can't remember in a year that went to that extreme that quick in the year.
It kind of tells you what we're trading. I think, right? I mean,
Yeah.
We're trading. This is going to be a huge crop. We're going to have this huge carry out. Spreads need to be super, super wide. Look what happened last year, right? Is what it feels like.
Yeah.
Like it's like a race to get your big corn short position on and go earn the roll, and just stay short, forever.
Yeah. Yeah. I mean, the market's trading like it wants to go a lot lower.
Yeah.
If you look at spreads in action.
It also could be too, just like because it did bounce back so much, it could have been just part of their levered trade. Whoever was long this, there are some funds that are long. They could also be long the spread as part of that length. and it was a liquidation trade that pushed us down there because we settled went down to 45 under, and then we ended up settling at 34 3/4 under. So almost all of the move was in the spread. Next question there.
Yeah, but that's also, the report came out, big volume, and then people reacted to see where, it happened so fast that the spike down to 45 under back to 38, you probably, attracted buyers and people to short cover, and very few people have, I wouldn't have, had orders to buy the spread 25 lower on the day. Like that wasn't really even on my radar.
Right.
So I think it probably just stuff moved so fast and the volume was so heavy that it took a while to attract, buyers to offset it. So,
yeah. The last time we had spreads past 60 under for DSTs, I think it was 2008 was we had full carry in DSTs corn. And that was great financial recession. Crude oil was falling down to, $30 a barrel, and everything was just puking. Today we still have pretty good energy prices. We've got underlying demand that has been showing signs of tightness. Like we just had July D's into the teens, before we knew what these stocks numbers were. There's a lot of market cues that actually would have pointed to something else, like tighter stocks, especially with all what the spreads and basis were doing going into the report.
Yeah.
So I think the market was just like, wow, there's more stocks than we expected. And that also had an impact on it. So,
yeah. And also, you're not really getting deliveries either, which is kind of odd. You got some corn deliveries, but, beans are inverted, supposedly huge on-farm stocks, big inversion of beans, and no deliveries by commercials. So there's a lot of counterintuitive things going on, but
right.
Definitely took the market off guard to have that kind of reaction after such a big break.
Yeah, look, beans higher stocks than expected, and we're still 52 over July over at this moment.
Yeah.
So.
Well, very good, guys. Just came into the open here. We get December corn down 4 now at 4.16 3/4. November soybeans down 5 1/4, 10.98 3/4. December Chicago wheat's up 3.5 at $6 1/4. One thing to point out: the markets will be closed on Thursday for the 4th of July holiday. It'll be a hard reopen at 8:30 Central on Friday morning. So we'll be around for War Room on Friday morning to talk through any changes in weather and things happening in the markets there. So with that, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you tomorrow.
Yeah.